Hello, neighbors, and welcome back to the neighborhood. I'm Squealer D, and I am back again. And this time we are back in the world of finance, guys, and we are comparing pips, points, and ticks to see what the difference is. The stock market world is huge, and we are on day 27 of learning, my friends. And that means if you are just finding us, we are 27 days ahead of you, but that is not very much. We have about 30-minute to hour-long live streams in a folder called Stock Market Learning, and you can bop on in there. That's on my YouTube channel right here. Just check on one of the playlists. It's called Stock Market Learning. And we have the entire series where you can learn what the stock market is, what a share of stock is, what a shareholder is, and now what pips, points, and ticks are. Pretty soon you will know everything there is to know about the stock market, and you will be able to trade on the stock market and make yourself some extra dough, guys. So today we have an article from Investopedia. We love Investopedia. And it is called Pips versus Points versus Ticks. What's the difference? And this is by Greg DiPercio. 13 plus years of professional experience in sales and SEO and 3 plus years as a freelance writer and editor. Well, okay, what was he selling? I like to know what people were selling. Oh, and it's fact checked by Yarlet Perez, reviewed by Charles Potter. I wonder why there's no... Maybe Charles Potter doesn't work for Investopedia. I know it's Potters, but I like to call him Potter because then it's like Harry Potter. Okay, so before we get into this article, guys, got my coffee. D for dinero, because you know we're talking about money, guys. It's still hot how I like it. Burn your tongue and your gullet a little. Okay, so let us do the article first. It's just a short one today, guys. You know, like a 5-10 minute read. After we get through this, we'll bop over to, you know, my favorite place, Yahoo Finance, and check out for finance news with Squealer D. Really, guys, though, you got to know all about stock news. If you're going to be trading the stock, loosen up my shoulders here and get into reading. Okay. So, pips versus points versus ticks. What's the difference? My hair keeps getting in my face. Whew. Blow it out. Okay. Point, tick, and pip are terms traders use to describe price changes in financial markets. While traders and analysts use all three terms in a similar manner, each is unique in the degree of change it signifies and how it's used in the markets. A point represents the smallest possible price change on the left side of a decimal point, while a tick represents the smallest possible price change on the right side of a decimal point. So, guys, a point is on the left side, so that means it's a whole number. Right? If it's on the left side of a decimal point, a point is a whole number. Then a tick is the smallest price change on the right side of a decimal point. So that means that it is not a whole number. It's what? A decimal, right? Yeah. Okay. A pip is short for point in percentage. Similar to a tick in that it also represents the smallest change to the right of the decimal, but it is a crucial measurement tool in the Forex market. So, takeaways. Point, tick, and pip are terms used to describe price changes in the financial markets. While traders' analysis use all three terms in a similar way, each is unique in the degree of change it signifies and how it's used in the markets. Some indexes restate prices in a manner that allows investors to track price changes in points. A point is the largest price change of the three measurements and only refers to changes on the left side of the decimal, while the other two include fractional changes on the right. An investor with shares in company ABC stock might describe a price increase from 125 to 130 as a 5-point movement rather than a $5 movement. Important. The point is the most generically used term among traders to describe price changes in their chosen markets. Because point is what you want, guys, right? So, for instance, let me show you. If we have something, a price change like $2.34, right, guys? So if we have that, $2.34, right? $2.34. The 2 is before the point. So the 2 is the point. See the dot? That's the decimal. This is a point. These are ticks. Points, ticks. Points, ticks. Points, ticks. And pips are price. What is it? What's a tick? I forgot already, guys. A pip, a point in percentage. Point in percentage. Got to remember that. Okay. So, some indexes restate prices in a manner that allows investors to track price changes in points. For example, the investment grade index, or IG index, tracks price movements to the 4th decimal. However, when quoting prices, it shifts the decimal 4 places to the left, so movements can be stated in points. Therefore, the price of $1.2345 is stated as 12,345.6. So they move the decimal over. See how they had it here, guys? Instead, they moved it over to the right 4 places to be between the 5 and the 6. You see where my marker is? Simple math, guys. It's just moving decimal places. Only in the IG index. And we don't even have to use the IG index. You just have to understand that points and ticks and decimal points may appear different, may change the number, like this one, for instance. Okay, ticks. A tick denotes a market's smallest possible price movement to the right of the decimal. See, here's the decimal, guys. A point goes this way, a tick goes this way. Going back to the IG index example, if this index elected not to shift the decimal place to use points, its price movements would be tracked in increments of tens, hundreds, thousands, 10,000s, with a TH on the end. A price change then from 1.2345 to 1.2346 would represent 1 tick. So do you guys see how it went up from 0.5? Like this is, imagine this is $1.23, guys. But you have these extra pennies over here. These are called half pences, right? Like half of a penny. You need to get this number all the way up to 9. The 4 needs to go up to 9 for the 3 to tick over to a 4 for this to become $1.24, right? So what they're saying is this to the 4th right here went up 1 tick. It just ticked up. Ticks do not have to be measured in factors of 10. For example, a market might measure price movements in minimum increments of 0.25 or a quarter. For that market, a price change from 450 to 451 is 4 ticks or 1 point. So we can see why it's a point, guys. We're on the right side of the decimal, right side of the decimal, right side of the decimal. You see this? It went from 0 to 1. That's 1 point. Now, if this 0 went to a 1, that would be 1 tick. But it went up 4 ticks because each tick in this example, each tick is 0.25, right? It would take 4 of these, 4 quarters, to make another whole point, right? Prior to April 2001, the smallest tick size was 1/16 of a dollar, which meant that a stock could only move in increments of 0.0625. While the introduction of decimalization has benefited investors through much narrower bid risk spreads, better price discovery, it's also made market making a less profitable and riskier activity. Imagine that. So a pip is actually an acronym for percentage in point. A pip is the smallest price move that an exchange rate can make based on market convention. Most currency pairs are priced to 4 decimal places, and the smallest change is the last fourth decimal point. So that's these ones up here, guys, the fourth decimal point. And by fourth decimal point, it means 4 out. So here's the decimal point where my thing is. You see the little period? That's called a decimal point in math. So 1 decimal point, or just point, 2, 3, 4, 6, 4 decimal points. So a pip is equivalent to 1/100th, or 1%, or 1 basis point. For example, the smallest move that the USD or CAD currency pair can make is 1.001, or 1 basis point. So each one of these is a pip. So this has 2,346 pips. 1 pip. So this is just getting them to use their Masterworks, which is, what's Masterworks, guys? We see it all the time. They want us to come here, learn to invest with Masterworks. This is their, it's for art. So you can invest in art. This Monet was a 9.2% return, but the Banksy was a 32% return. Shows what's popular right now, huh? Okay, so we know what points are. Points are full points. Like if it goes from $1 to $2, that's a point. If it goes from $1 and a penny to $1 and 2 pennies, then that is a tick. And if it goes up 1%, that is a pip. A percent in point. 1%. That's easy to remember, right, guys? A point is $1, a tick is pennies, and a pip is 1%. Just breaking it down the easiest way we can, guys. And look at that. It only took us 15 minutes to understand what a point, a tick, and a pip was. Let's see what Yahoo. Let's Google points, pips. Oops, that's not how you spell it. Points, ticks, and pips. Examples, and see what they got. I like to see what other people have, you know? Got a lot of videos. Pretty much the same, huh? Oh, they say more about Forex. We don't really know a lot about Forex. Forex is a foreign stock exchange, remember? This one, let's read the pips from this one. He gives, I don't know if it's better, but it's longer. PIP stands for percentage in point. The term is mainly used in Forex trading. It's a way of measuring the Forex currency pair's movements. How many points are in a pip? A pip is equivalent to 10 Forex points. So when you see someone saying that is targeting a 300 points move, it means he's trying to profit 30 pips. Simple, right? Now let's be careful with one thing. Different Forex brokers may have the price with different decimal places for the same pair. And we learned that. They may move it over 4, right? So if they have 5 versus 4 decimal places. So these ones have 5 places. You see how there's 5 numbers behind the dot? Some of them have only 4 behind the dot. So when you have 4, the price doesn't have explicitly a point there. If it moves from this to this, which is one tick, you would have moved up 1 pip and not 1 point. We know that. So this one, because it went from a 4 to a 5, it moved up a pip. But that's just Forex. And we don't even know Forex yet, right? But we will. Pips, points, and ticks, guys. Pips, points, and ticks. Let's see what kind of pips, points, and ticks we can find on here. Watch for 5 signals from the White House. Debt ceiling talks. Stocks fall as all eyes on debt ceiling talks. Yeah. Oh, Riot's up. Let's look at Riot. Yesterday we were looking at Riot, and I wanted to see if it went up, guys. So yesterday, what was yesterday? 5.9. That was today. Let's find yesterday. Oh, cancel. How do we? Oh, we go over here. I always forget. So 5.8 was yesterday, right? And we were looking, and it did its crossover thing. It was in the morning. It must have been here. And it crossed over and it went up. These are the moving averages. Remember, this is the large moving average. I think it's a 50-day, and this is the 20-day. So we're looking at entrance and exit points. I think this yesterday is where we said would be a good entry point, and it was headed up. So we could have got in here where it crossed over, which was at about 10.54 and sold at 10.80. And how much would that have been, guys? It would have went from 10.54 to 10 point, what's the top? Like 80? So, look, guys. 10.54 to 10.80. That means we would have went up almost 30 pips. No, not pips. Ticks. Because we're talking about on this side. This is the point side. This is the tick side. So if this went up to 80 from a 5, it went up almost 30 ticks, guys. That's how it works. So if it would have went from $10 to $11, it would have went up a full point. Look at us learning. So we know that it's coming back down. We would have got out at the top. Probably, I don't know where we would have got out, guys, but I probably would have got scared and went out right here before it started to fall. Like when it turned red, I probably would have got out right here. We can zoom in so you can see better. But it crossed here. We probably would have bought in these green, like as it started to go. And then it's following this average. So I probably would have gotten scared. Probably here. Where all this red came, I probably would have got scared and sold. That would have been me. But if we have good risk management, we can move our stop losses up with it. And if you move your stop loss off, let's say we came in here. And it looks fine, but it looks kind of scary here. We can move our stop loss up to right here, guys, so that it's above the moving average, right? Right above this purple line. So that if it goes down below the purple line, then we just sell. So maybe we would have sold here. And then we could have rebought here and sold here and rebought here and sold here. Like, you don't have to worry about holding on to stock because they are not your friend. Like, I understand we are humans and we like to hold on to things. We have, we're real sentimental. We like things. We like to find things that we like and we like to keep them. So I understand that, but not with stocks, guys. Stocks are only, think of stocks like a hand towel that's not in your bathroom. It's not your hand towel. But you want to use it to wipe your hands off and you want it to be clean and not stink, right? So you have to know everything about it, but you don't care about it. You're not going to wash it. You're not going to take it out of the bathroom. You're not going to do anything with it. It is not your towel. These are not your stocks. We are not going to have any feelings whatsoever for them. No emotion. Not like you do for your husband, not like you do for your job, not like you do for anything. No emotion. Stock market is somewhere where you come and you think of the stock market like a textbook, guys. because textbooks are not always right, just like the stock market, right? You might lose a little bit on the stock market. You might have a misprint in your textbook, but you don't care about a textbook. You don't get all worked up because your textbook's got a misprint. Like, that doesn't happen. So don't get all worked up if the stock market has a misprint, and don't use money that you have to be emotional about. Maybe you make a stock market fund and you call it your fast food fund. Don't even call it a stock market fund, guys. We're supposed to be saving up right now. If you are in on this with me, you are trying to make a little tiny fund so that we can trade with it, use good risk management, high risk trades so we can grow the little amount, guys, into a bigger amount to work with, because that's what poor people have to do, right? We have to start with the very limited minimum amount and grow it a little tiny bit at a time. And that's okay. That's called exponential growth, guys, and it works. If we start out with $500 and we make $18 in a day, the next day we get to start out with $518. That means you can make $22 that day, or perhaps more. I'm just giving you an example. If everything is going to grow if you allow it to grow. So you have to disconnect mentally from it. So perhaps you like to smoke a cigarette. Okay? Stop smoking cigarettes. I know it's hard. Stop smoking cigarettes and put all of that money into a cigarette fund. That way, when you use your cigarette fund to try to make money on the stock market, to learn with, you don't care when you lose it, because that was your cigarette fund. You were going to burn it anyway. You were going to burn every single one of those dollars, so you should have no mental attachment to those dollars. Therefore, you could put them into the stock market, and if we make a mistake, you know what happens? You say, well, that was a good smoke. And you smoke it up and you burn it up and it's no big deal. Maybe you don't smoke. Maybe you like to have sweet treats. So you make yourself a little savings account and you call it sweet treats. And instead of sweet treats, when you get $500 worth, instead of buying your sweet treats, guys, I know how much they cost because I am a sweet treat addict. I am in recovery right now for sweet treats. So if you were going to go to the store and spend $1.59 on a Hostess cupcake, you instead throw that $1.59 into an Acorns account or another type of small savings account. And you save it and you label it sweet treats. Don't label it stock market. That's not your savings. It's your sweet treats. You're taking away a bad habit and you're putting it into a savings account. And then you will feel no type of way, my friend, when you burn through it. Because it'll be just like when you used to burn through the sweet cakes. How many times you sit there and eat a whole box of sweet cakes and say you weren't going to do it, but you did it? That box of sweet cakes might have been $5. Look, one share of Riot Platforms, which is we found out yesterday, Riot they do crypto mining. You can buy one share for $11.26. That's a cake. If you go to Safeway and you buy a little frozen, like a cake out of the bakery, out of the dairy. If you buy a cake out of the bakery for $9.99 with tax, it's going to come to about $11.26, guys. 10 something. So you bought a little $9.99 cake and a piece of gum for $11.25, and you own an actual share of this stock, and you can make money off of it. And I'm not saying you're going to make a lot of money off of the stock. But what I am saying is it's the same thing. If you are willing to spend the $11.26 at the grocery store on whatever it is your guys is, maybe you don't like sweet treats. Maybe you like beef jerky. Maybe you're a meat guy, a meat gal, and you like to eat a lot of meat. You can stop eating so much meat. It's not good for your heart anyways, guys. Red meat, not good for your heart. Beef jerky, not good for your heart. All that salt, not good for your heart. So take that money and call it my meat fund. And instead of meat, you throw it in the stock market. That is the only way that you are going to go into this with no emotions. Because think about it when you have to buy new tires for your car, but you weren't expecting it. You got your money. You have your even maybe let's say you're doing really good and you have a good emergency fund. You have 6 months worth of money, $10,000, guys, in your emergency fund. You're doing good. But your car needs new tires unexpectedly. Even though you have that money in there and you're covered, you still feel like, man, who popped my tires? I don't want to buy new tires. $1,000 for tires? This is going to cut my savings by a tenth. You know, if you have to use $1,000 on tires, it's going to take your $10,000 down to $9,000 and you save so long, you're going to be like, shucks. You don't have to. You can save money from other things you're buying. And I know some people are going to be like, but Squealer, I don't spend money on anything I'm not supposed to. Well, then I have another suggestion for you. If you can sit here and look me in my eyes and tell me that you do not waste any money, then my friend, you need to stop doing whatever you're doing. And you need to get on social media and you need to teach us all how to not spend extra money. Whatever job you're doing, it's the wrong job. If you literally are living your life, let's say you work at McDonald's and you don't spend money anywhere else on anything that isn't a necessity, you need to have a channel because that's not happening, people. It's not happening on the regular. And if you can do it, you need to be teaching other people and monetizing it. You need to be making more money from what you're doing. Because if you are doing everything you're supposed to, you're eating healthy, you're going to the gym, you're not spending extra money on anything frivolous, bro, you are a unicorn. And unicorns can make money. If you are working at McDonald's and paying all your bills and doing everything right and not spending any extra money, you, my friend, are one of a kind. For the rest of us who are not one of a kind and cannot sell our unicornness on the internet because we're special and we do everything the way we're supposed to, there is something you can cut out. Maybe I haven't said it yet. Maybe you don't like sweet treats. Maybe you like guns. Maybe you like ammunition. Maybe you like pocket knives. I don't know. Maybe you like art supplies. Maybe you like tech supplies. I don't know what it is, but there is something in your life, in every single one of our lives, that we can cut out. Are you buying too many clothes? Are you not reusing stuff enough? There is a way to save money. And I'm not talking about a lot of money, guys. That's the thing that sucks about being poor. Everybody wants to say that poor people have a bad mentality of mind. Like, the bad thing about poor people is they think they got to pay their bills, and rich people, they use their money to make more money. Well, yeah, we use our money to pay our bills because if we didn't pay our bills, we would die. I'm not telling you not to pay your bills, and I'm not telling you that you should live an even worse life to try to be rich. I'm not saying that. I'm saying if you want more money, you have to make a cut. I don't know what cut that is, but you have to make a cut. And it sucks. And you still have to keep paying your bills. But you have to make a cut so that you can find money that you can make more money with. When you're rich, guess what you get to do? You get to pay your bills and have all this extra money laying around to make more money with. So yes, it is easier for a person that is already born with money to start, but it is not impossible for even a bum to start trading on the stock market. Let me tell you something, guys. If you are homeless, I have been homeless before. If you are living in a tent, I have lived in a tent before. I was a child of poverty. It is okay. There's nothing wrong with being poor. There's nothing wrong with you. You are not defective. You are not a bad person. You are poor. There's a difference. But you also have more than you think, because there's this one little thing that nobody counts that poor people have. It's this right up here inside your mind. And if you're homeless, guess what you have more of? Time, people. Time. If you are homeless, you have time. Use that time to find any and all free things you can find. There are resources out there. Use your entire day to find free resources and get yourself out of your tent. Once you're out of your tent, maybe you have to do things like pre-cooking food to even save $5 a week. And maybe all you could save is $5 a week. But guess what? It's better than being in a tent, and it's better than not having that $5 a week. It's slow, it sucks, and it's not fair. But guess what, guys? Life isn't fair. And right now, just like they don't want to raise the debt ceiling, they are not going to help make things fair. They're going to make things less and less fair for us. Back in the old days, before the Buttonwood Agreement, before the stock market officially became the stock market, the New York Stock Exchange, there weren't laws in place, so people were ripping off the rich people. They put those laws into place with the Buttonwood Agreement so that they wouldn't lose their money. There are many other things put into place so that they don't lose their money, and it makes us harder for us, poor people, to rise up and get that money. You want to know why? Because we can't all be rich. If everybody was rich, think about what it would be, guys. Who would go to work at McDonald's? Who would own the McDonald's? Who would own the cow farms? Would you? If you had $1 million in the bank, would you go to work at McDonald's? Would you go to work at Kemper's or Skipper's or Long John Silver's? No, you wouldn't. If you were rich, you would not go to work there. If you were rich, your children would not go to work there. More and more people are not, they don't need their children to go work at fast food. It's dangerous. People are hideous. They spit on fast food workers. They throw coffee at them, and now they're shooting them. What about that kid that got shot in the drive-by? I mean, in the drive-through. Like, I don't want my kid to work at fast food. When my daughter is 16, she is not going to work at fast food. Even if I own the fast food place, she's not going to work there. I do not want my daughter working in fast food where it's dangerous and low pay. And that is happening more and more and more and more for poor people. So if everybody got rich, who would work there? Who would clean up the horse stalls for horse racing? You guys got to think about this. Rich people have a whole society built, and it's built around poor people running that society. You don't see other rich people employed as housekeepers. You see poor people employed as housekeepers. So who's going to clean the rich people's house if everybody gets rich? American society works because some people are well off, some people are okay, and some people are doggone poor. And the doggone poor people, they get kicked down and kicked down and kicked down because somebody has to be getting kicked. There's no way around it. The way that things are set up, somebody has to be the fall man. And if you don't want that to be you, if you don't want to be the fall man anymore, unfortunately, you weren't born with the big bootstraps that a lot of these people were born with. So you have to give something up. Maybe a rich person never has to give anything up. That's okay. It's okay to give something up. Give it up. It'll be more worth it in the end. How many rich people do you know that are unsatisfied? Maybe you'll become a rich person that's satisfied. Maybe you won't become a rich person at all. Maybe once you see what it means to be rich, you'll start giving your money away like McKinsey, that billionaire that was giving away billions of dollars, and now she's even richer, guys. She made money giving money. Imagine that. So, do not lose hope, my friends. You could be in a tent listening to me right now, and I promise you, you can get out of that tent. You yourself can get out of that tent. All on your own. All you have to do is give something up. And don't think that these rich people don't give things up for their wealth. How many rich people you know that spend all their time with money and never with family? They gave their family up, guys. I see my daughter all day long. I'm with my daughter 100% of the time. And I would not give that up for all the riches in the world. If somebody came to me right now and said, give your 12-year-old daughter up, don't see her no more, and you could both be rich, I don't need those kind of bootstraps. She doesn't need those kind of bootstraps. We'll both be better off without money and have each other. So remember, everybody has to give something up. You have to decide, are you willing to give it up, or are you willing to stay where you're at? And that's what we all have to decide. Even rich people have to decide that. Are they going to give something up, stay where they're at? What are they going to do? So I'm not saying it's going to be easy, and I'm not saying it's going to be fair or equal to the rich people, but use your brain and get smart, guys, because that's the one thing that nobody except for yourself, when you get old dementia and Alzheimer's, that's the only person that could take your learning away from you is you. And if you take it away from yourself because you're old, I mean, you still won. Like, you're done now. You're done. You're old. You made it. You made it as a smart person. Like, how many smart old people are there these days? I don't know. I'm starting to think the way that the debt ceiling is being ran by mostly old people and they don't know what they're doing. I'm starting to think that none of them know what they're doing. So if you make it to an old person and you have your head full up here and you know what you're doing, I say you're a winner, guys, money or not. So my goal for you is to get rich, but everybody's goals change over time. So maybe even our goals will change over time. If you are new to this channel, welcome, my friends. Check out the old stock learning. It's called Stock Market Learning Playlist, and you will find all the things we've learned about so far. You could catch up. Jump in the comments. Let us know what you know. Maybe you could teach us something. But for today, that is it, my friends. We have seen enough news just talking about what we talked about today. That's it. I will be back here tomorrow, same time, same place. Be there or be square. Hope you neighbors have a wonderful day. Like super to the sky wonderful. Bye, guys.